Want to know how billionaires legally avoid paying taxes on their wealth? And how you could potentially apply the same strategy to your Bitcoin? This isn't financial advice, but you need to hear about this. It's called Buy, Borrow, Die, and it could completely change how you think about your crypto portfolio. So here's the problem every successful investor faces. You buy Bitcoin, it moons, and you're sitting on a massive profit. But the second you sell, guess who comes knocking? The tax man, ready to take a huge chunk in capital gains tax. Selling your winners feels like you're being punished for making smart moves. It's a frustrating cycle. You want to use your gains, but you don't want to give up a huge percentage of them. So, what's the alternative? Enter the buy, borrow, die framework. It sounds a bit morbid, but it's a genius wealth preservation strategy. Here's the simple version. Step 1. You buy an asset that appreciates over time. In this case, Bitcoin. You hold it, no matter what. You don't sell. Step 2. When you need cash, you don't sell your Bitcoin. Instead, you borrow against it. You use your Bitcoin as collateral to get a loan. This is the key. Loans are not income, so they are not taxed. You get the cash you need, and your Bitcoin is still yours, still growing in value. Step 3. The die part is where it gets really interesting for generational wealth. When you pass away, your heirs inherit your assets, including that Bitcoin. Thanks to a rule called the step-up in basis, the cost basis of the asset resets to its market value on the date of your death. This means if your heirs decide to sell it immediately, there's little to no capital gain to tax. The tax liability is essentially wiped clean for that generation. Your original loan is typically paid off by a small portion of the estate, and the rest passes on. Now, this sounds amazing, but you absolutely have to understand the risks. This is not a risk-free strategy, especially with a volatile asset like Bitcoin. First, market volatility. If the price of Bitcoin crashes, you could face a margin call. This means the lender will demand you add more collateral, or they will liquidate your Bitcoin to cover the loan, which is a taxable event you are trying to avoid. Second, there's liquidation risk. A flash crash could automatically trigger liquidation before you even have a chance to react. And finally, the crypto lending platforms are still relatively new. You have to be careful about platform risk, hacks, and who you trust with your collateral. So, while buy, borrow, die is a powerful concept used by the ultra-rich, applying it to crypto requires extreme caution. It's a long-term strategy that's not for everyone. But understanding these high-level financial plays is the first step to building real, lasting wealth. If you want to learn more secrets about how money really works, make sure you hit that subscribe button and turn on notifications. Thanks for watching.